Good evening, and welcome to the New York Immigration Coalition's Road to Recovery video series. My name is Nora Melendez, and I am the Immigrant Services Support Events Associate at the NYIC, and I will be your host. Today, we will be hearing from Jose Miranda Jr., the Director of Economic Justice at Chhaya. We will be discussing what is credit, how you and your family can safely build it, and the tips and best practices for maintaining good credit.
Hi, everyone. I'm Jose, the Director of Economic Justice at Chhaya. I've been working in the field of financial empowerment and financial education for over 11 years. At Chhaya, I work with a really awesome team that provides services for community members and small business owners related to personal finances and economic development.
Thank you for joining us today, Jose. Let's start at the beginning. What is credit?
Credit is basically trust. Credit is the kind of trust that allows a business to provide money or resources to someone else with a promise to pay it back later. Someone's credit is based on lots of factors that are then used to calculate a credit score. The higher your score, the more trustworthy you are to creditors.
Since someone's credit is based on multiple factors, then what are the best ways to build credit?
Yeah, it's a bit of a catch-22. You need to use credit in order to build credit. A bank won't loan you money unless they think that they can trust you. Credit is based on your borrowing history that gets reported to 3 credit bureaus: Experian, Equifax, and TransUnion. Often people start building a borrowing or a credit history by taking out some kind of secured loan or credit card. With a secured loan, you put down a deposit at a bank, let's say $500, and put that into a CD, which you're not allowed to touch. The bank then gives you a $500 loan, which you pay back monthly. The bank trusts you more because if you don't repay them, they can take the money out of your deposit. These monthly payments then help build your credit. A secured credit card works the same way, except you get a credit card instead of a loan. These can be a bit more expensive because they tend to have annual fees and high interest rates. At Chhaya, we have a lending circles program that helps people build their credit too. Instead of having to put a deposit down, we form a savings circle, often called a susu or a tanda. We take the same practice where a group of 6 to 12 people agree to a monthly payment amount. Each month, one of the participants receives the payment funds. The payments are reported to the credit bureaus, building your credit. In this program, you're able to save and build credit at the same time.
And how can I get involved in Chhaya's Lending Circle program?
Yeah, our lending circle program is accessible online to community members. To sign up, you can reach out to my colleague Gurpreet Singh at 718-478-3848. There's no cost to start up, and the payments are 0 interest.
That's great. So as we're talking about building credit, can you explain the difference between building good credit and building bad credit?
Yeah, good credit means you have a long history of borrowing and repaying money on time and in full. It means that you manage your credit well. For example, you don't max out your credit cards. Bad credit is the opposite. It means you have a lot of missed payments or you're maxing out your credit cards. Having a lot of collections can also hurt.
Do you have any tips for maintaining good credit?
Yeah, the best credit advice I ever received was that to be able to borrow, have good credit, is to make it look like you don't need it. This means always pay your bills on time, keep your credit lines as low as possible, and don't apply for a lot of credit. Creditors can see what you're borrowing and when you're applying. So struggling to consistently make payments and applying for too much credit can hurt your credit score a lot.
So let's say I've built bad credit. Is there any way to fix it, or is it too late?
Credit is fluid. It means you can always improve or hurt your credit. The great thing about how credit scores work is that they're weighted in a way that your most 2 recent years are the most important, are more important than the rest of your credit history. So to build your credit back up, you can start right away paying off old debts and building a new, better credit history. Once your debts are paid, you can use a lot of the same strategies as starting to build credit fresh: secured loan or credit card or a lending circle.
And if I don't have a social security number, can I still obtain credit or set up a bank account?
Yeah, we get that question a lot. Banks don't require a social security number to open accounts or to borrow money. You can do either with an individual tax identification number or an ITIN.
I've heard that my loan options depend upon my credit score. Is that true?
Yes, the most trustworthy borrowers, that's to say those with the highest score, get the best terms. If you have a low score, you can be denied or pay a really high interest rate compared to someone with a good score. So for something like a car loan, that could mean you're paying thousands of dollars more for the same car than someone else would pay if they had good credit.
So are loans ever a good idea?
It all depends on what your needs are. Loans are good when you need a specific amount of money all at once, like buying a car. But first, I'd say that you should never borrow more than you think you can afford to pay back. You should take a look at your income and your expenses and make sure you have wiggle room. If the payment is higher than you can afford, consider finding other ways to borrow less. Or if you don't need a lump sum all right now, maybe it's to make repairs at a home over a few months, a line of credit might save you from paying some of that interest. A free financial counselor, like the kinds that we have at Chhaya, can sort of help you figure out what the best path forward should be.
Where should community members go if they have more questions?
Yeah, community members can talk to one of our counselors at Chhaya about any credit or debt-related questions. They can reach us at 718-478-3848 and ask for Tristan for a financial counseling session, or Gurpreet to learn more about lending circles.
Thank you, Jose. Now we will take questions from the audience. So our first question is there a required income level or cap to participate in Chhaya's Lending Circles program?
No, there is no income level required at all. We don't check credit history at all in the past. And the group themselves will come together to decide what the payment amount will be. The minimum is about $100 per month.
Okay. And we also have another question about how you can trust the Susu.
So the benefits of doing a lending circle through Chhaya versus doing it informally with the group is that we take the money directly out of everyone's bank account on a monthly basis. So this way, because we're in charge, you don't have to worry about anyone forgetting not to pay. And if someone doesn't have the money in their account, Chhaya will follow up with them and make other arrangements to make sure that everyone is receiving all of the money that they need.
Okay, got it. And then what are the benefits of having credit?
The benefits of having credit are huge. All kinds of people will check your credit report, even if you never need to borrow money. So if you want to rent an apartment, they'll check your credit history. If you want to, outside of New York City and other parts of New York State, your employer can check your credit report before offering you a job. Insurance rates, car insurance, those are all linked to your credit score because, again, it's all about that trust and level of responsibility. So they kind of use this fair or not fair as a way of judging how responsible you are.
What is a credit report and who can see it?
So a credit report is put together by those three companies I mentioned before, Equifax, Experian, and TransUnion. And it's basically a listing of all of the accounts, all of the times that you've borrowed money and what your payment history is. It also includes information around your application. So this is publicly available information. You can view your credit report. It's really important that everyone check to make sure there are no mistakes. You can go to annualcreditreport.com to get one free report from each of the three bureaus once per year. And no one else can really pull your full credit report without your authorization. So they'll need your signature and permission to pull it. Usually, again, it's around applications for credit, applications for an apartment, things like that.
Okay, and is it possible to lower interest rates on a loan or credit card?
Yeah, interest rates are always negotiable. Remember that, when you signed up for a credit card or for a loan the first time, you did sign a contract basically saying you're willing to pay an interest rate. But if your credit has improved in the long term, you can call your creditor and ask them to negotiate. That's a good time to call a financial counselor like those we have at Chhaya. We have a lot of experience doing stuff like that. And if they're unwilling to give you any better rates, they can. A financial counselor can also help you figure out how you can refinance your debt. That is, move that debt to another financial institution that might offer you a better rate.
Okay. Doesn't look like we have any more questions. So thank you again, Jose, and thank you everyone for tuning in. To stay involved with the New York Immigration Coalition, follow us here on Facebook, Instagram, and Twitter. Stay safe, take care, and enjoy your evening, everyone.